Hi, my name is Chris. I'm the head of sales at AirDNA. I've been working with AirDNA for almost 3 years now. This is the second time I'll be presenting at the ExpoRV Vacational. Obviously, I am English. I need to apologize once again for being native English speakers. We are very well renowned for not slowing down for people whose English isn't their first language. So I do apologize, but feel free to pause me whenever you want. Rewind it back and see if I can say it again. Rewind it back and see if I can say it again. But let's crack on with the presentation. If you attended the very successful one from last year, you would have seen that we'd started the presentation off with a very similar sort of slide deck that we're going to show you this year. With the current trends around COVID, where people are coming from, the staycation that's been moving around a bit, we're going to show you a lot of those slides moving over the next through of the presentation. So thank you again, Manuel, for the invitation. We've tried to bring a little bit of Cancun to the office, as you can see behind me. We're going to crack on now with the slide deck. AirDNA, for those of you who don't know, we've been gathering data on the short-term rental market, so Vrbo, HomeAway and Airbnb for the last 4.5–5 years. We've been collecting data and we help you turn that into actionable insights into your short-term rental properties. The way that we do that is we help by taking on a number of different metrics from across that and help you with competitive benchmarking, dynamic pricing, some property selection and some listing optimization by comparing that with the industry trends that's happening. We take a number of different sources to receive our data. So we scrape data, that's the majority of our platform, with currently 10 million active property listings around the world on both Airbnb and Vrbo. But we also use some partner data, and that's driven by property level data that's provided by some of the largest PMSs in the world, and channel manager data. That's 750,000, 750,000 properties that are shared with us on a monthly basis with real live reservation properties. We use that to increase the veracity of our data scraping platform, and we use that to teach our algorithm on when bookings occur, when bookings happen, and what's happening within the industry. We also have host supplied data. So this is individual hosts with a minimum number of properties. They would be able to supply their actual live reservation data alongside that, and that again ties in with the partner shared data that improves the veracity of our data set. Moving on, we can see that the outlook from 2020 has been affected by COVID. We'll move on to COVID specific trends in a moment, but before we do that, let's just look at how 2019 compares to the first half of 2020. Up until August, we can see that there's a large drop in bookings around mid-2020, and that it's not actually as sharp as we'd expected. I think the majority of what we can see in lack of bookings comes around April and March, especially within Europe and America. We can see that there's been a lot of decrease in people's trust around travel, and the bookings that actually occurred within those months, there has been a quick increase from that. We were expecting more of a V-shaped recovery. It has slowed down slightly, but we are seeing that recovery start to pick up again. There's more trust around short-term rentals. We'll see that more over the COVID-based trends at the next slides. When we look at the STR index of cities versus destinations, we can see that there has been a lot less of a will to move towards cities and more on those less popular destinations over the last few months. We can see the big decrease around 2020, especially within the cities frames, and the destinations have stayed more or less around the same regular pattern that they've followed over the last couple of years. Growth has stopped slightly, but we do still see the number of listings across the globe, and especially within US markets here, we can see that is again starting to pick up once more. Some US markets are actually curiously benefiting from this crisis. We know that in Florida, to pick out one state, there has been a huge increase in real estate and an interest around that market, and that again is something that we want to look at a bit further on into the next slide. As mentioned previously, the areas and the destinations that have most benefited, the majority of those are in Florida, as we can see on the next slide, whereas in comparison to the cities that have seen decreases, there's around about an average of 20 to 30% year-over-year decrease in the number of listings because of that less interest in moving towards a city destination over the course of 2020. When we move beyond a city breakdown, international versus domestic travel has taken a decrease as well. We see that on this slide, this is the average travel distance from 2019 versus 2020, whereas we see in 2019 people were a lot more willing to travel further distances to go on a short break and take a short-term rental, whereas in 2020 that distance has declined by quite a substantial amount. So we see a lot of those staycations happening, people driving to their locations as opposed to flying to locations. We take this from our guest data analysis, so when people leave reviews on the website, we can actually see those reviews. We know where that profile comes from. We can see how far that person has traveled, and that type of information again is available through the AirDNA data platform. With regards to length of stay changes, prior to COVID, short-term stays made up the vast majority of nights booked, nearly 80%. Longer term made up around 20%. We'd confine and define short term as 1 week or less. During the pandemic, short-term stays lost 30% of that of the share of the total bookings, dropping down to under 50% of all nights booked. Since June the 1st, short-term stays have risen back up to 68% of the bookings, and that's somewhat back to normal, but still a long way away from that 80% from previous. Prior to March the 10th, the average length of stay was 3.8 days, and between March and May, the average length of stay was 6 days, and since May the 1st, that's gone up to 4.3 days. When we look at booking lead time and how that's changed over 2020, we can see that there has been a real dip in how far in advance people were actually booking their vacation rentals. That dip is around that March time of 2020, where there was a lot of reluctance in booking something so far in advance. That was really dropping down to someone that was booking within 10 days of their actual stay. What this really means for you over the last 2 slides is, with the average length of stay changing and the booking lead time changing, for a property manager, this is really key information to understand how long to hold on to prices, how long to extend the longer term bookings that are available on these platforms to get the most out of your listing. Every year, AirDNA show the slide with supply increasing in the short-term rental market. This is the first time we've ever shown a slide where 2020 or 1 year has decreased versus the previous year on Airbnb and Vrbo alone. Rentals across the United States have increased by 105% over the past 3 years, propelled by that new wave of travelers looking for more unique and affordable locations and affordable hotel alternatives. Since the beginning of the pandemic, supply has remained relatively unchanged globally, with only a 3.5% drop-off in inventory since January to August. Hosts seem to be keeping their listings active and published. Demand hasn't evaporated, it's just changed form. And we think that's important for people to understand why there is more of a push towards short-term rentals. If we were to compare that with the hotels, we can see again how people are tending to travel towards a safer environment with less of a combined areas, where there's shared areas and communal areas within something, where within a short-term rental an entire place wouldn't have that offering, and that has a lot more of an enticement towards travelers moving towards where they're going in their next vacation. For the purposes of this report, we actually partnered with STR, as we don't have hotel data, but we have partnered with STR. Smith Travel Research have provided us with some information on the hotels, and we see that alongside on this next slide, the big drop-off in occupancy rates for hotels, specifically during that pandemic. Short-term rentals have remained relatively unscathed in comparison to hotels, for what was mentioned previously, with travelers being a lot more aware of what's going on within those communal areas. People have wanted to travel, they've continued to travel, but it's been towards that more of the short-term rental sites as opposed to hotels. On the next slide, we can see a strong average daily rate for short-term rentals. Again, those short-term rentals with an entire place or with 2 bedrooms plus, that was a lot more of an increase from year over year, as opposed to the hotels, which again, that average daily rate has now decreased. On this chart, what we've tried to do is break out the hotel comparable metric, which would be studio and 1-bedroom apartments, which would be direct competition with most hoteliers. Those are still outperforming hotels at this moment. We can see that over the course of the pandemic, hotels are the ones that have taken the biggest hit in terms of the average daily rate. When we look specifically at the Latin America markets overview, we can see with a breakdown of a couple of different countries, for example here Colombia, we can see the blue line is 2019 versus the orange of 2020. Colombia has actually seen an increase in revenue over year by 6%. We are looking at the top of the chart here at the top right hand side with the historical active number of properties and the historical new bookings that were received across the country in Colombia. And on the bottom chart, which should be appearing now, you'll see the future bookings and the future average daily rate that's been set and the expected occupancy rate to be happening again. And again, we're looking from 2019 versus 2020, however, this is future pacing. When we compare that with Brazil, one of the largest countries within Latin America, we can actually see a decrease year over year, July versus August in 2019 versus 2020, of 19% overall in decrease of Brazil. Chile has remained relatively flat. It's a 1% increase year over year. That's remained completely unscathed with the pandemic. We can see some slight increases and decreases in certain months, but year over year, we've remained pretty much unchanged with Chile. When we analyse Mexico with year over year trends, we can see the number of active listings has decreased by around about 10%. The listing nights booked, a whopping 32% of listing nights booked. That is a decrease from year over year. And the occupancy rate has stayed pretty much the same in terms of what's available and what is not. Obviously, if there is a booking within an available property, we can see that information. Average daily rate has decreased by 6% to $151 for the average daily rate, and the revenue per available rental, $65, which is a 6% decrease from 2019 versus 2020. When we compare that to some of the biggest cities in the world, we know that London has taken a 50% hit over RevPAR, Paris 53%, Rome 47%, Barcelona 73%. So those are some larger numbers for you to take into perspective when we're looking at what exactly is the impact of those. Obviously, we're taking cities, and previously we were talking cities versus destinations. There are a lot more destinations within Mexico that people that are considered the large cities. There's secondary vacation spots within Mexico that are very nice to travel to. I think that's probably kept up a lot of that decrease from Mexico City. When we look into the locations with the most active listings across Mexico, these have been the hardest hit, with major cities have a significant year-over-year decreases in booked properties, Playa del Carmen being the one with the hardest hit in terms of decrease year-over-year from August. In terms of the smaller markets, and the smaller we would take between 1,000 and 300 active listings, they showed more resilience as people were more inclined, as previously mentioned, to travel to a smaller destination. If you could still work from home, if you could still remain safe with your family or safe in a certain area, people were more likely to travel to a smaller destination, and that's remained where we can see there's been more resilience in these smaller destinations. For example, Bacalá, Hidalgo, Santiago de Querétaro, they've seen more resilience within those number of listings and booked properties. A lot of our customers use AirDNA from an investment perspective to answer questions about where is the next best place to invest in a short-term rental. One of the tools that we use on our online tool and our online platform is MarketMinder, and please check out Nicole Bull's presentation for a deep dive into MarketMinder and how it works and what metrics you can use from there. That's a really good example of what people use online on our online B2C tool for investors to answer some of those questions. As you can see on this slide, we're looking at a city comparison for investment opportunities around August 2020. When we compare then the ADR between those four cities, you can select the areas that you're looking for and find out what those differences have been in terms of ADR or occupancy rates from a city perspective. We also do the same with destinations. Again, this is taking non-cities but destinations and looking at the ADR from one location versus the next, and the occupancy rates from one location versus the next. For example, the occupancy rate in Acapulco is 42% versus Guadalajara 52%. Average daily rate in Guadalajara is 41% versus Acapulco 109. With that information, we are a lot more confident in providing investors with that data for them to be able to make the decision as to where is the next best place for them and within their type of investment capabilities and the returns on the investments they're looking for. At AirDNA, we strongly believe that at least for the foreseeable future, domestic travel will lead the charge. We have already seen clear signs of this in the data over the course of the coronavirus pandemic. That rural drive-to destinations have received significantly more new bookings than urban areas on average. With safety a priority, travellers are choosing destinations closer to home, away from crowded centres and shared spaces. Professionally managed vacation rentals are able to provide the privacy and cleanliness that guests are looking for in a post-COVID world. Finally, looking at Mexico City. What we're trying to show you here is the future of what's happening with the short-term rental vacation world. You're wondering how many bookings are being made right now? How many bookings are still available right now? Want to see the difference between your market average? What's the available rate versus the booked rate? Is supply ramping up or dropping off? Should you increase prices or hold on? These are all very relevant questions and things that we try to answer with our data. Not only have we seen the data around travelers' behavior within the coronavirus pandemic, we've also seen changes on our behavior and how we collect data, how we present data. We've made a lot of changes over the last 6 months in future pacing, future looking data to help investors and help professionally managed owners and even the people that are looking to start out in this industry understand what is coming, what's around the corner. We're looking into the future. With the data that we collect, we are looking 12 months into the future consistently, and we have now decided to update this on our MarketMinder platform and on all of our offline reports. Future looking data which will show you when bookings are happening, when bookings are taking place, and for when those bookings are taking place. For example, on this slide we can see within Mexico City on Dia de los Muertos, we already have around 600 booked listings already for that city on the 31st of October. We can see when bookings are happening, how far in advance they're taking place, and for the average nights of stay that they'll be taking. This is important information for someone when they're making pricing decisions for listing their property. If they want to price it at a certain rate, how many people have already taken, what percentage have already taken bookings for that date? Are you one of the final ones there? What's happened with your pricing? Is there something where you can see? We show you the average price that was already booked. We show you the median price. We show you the lowest price range, the highest price range. That's important information for people to see what's coming, what's around the corner, what's happening in the next 6 months, and what can I expect from my listings. That's it from me. Thank you very much for paying attention. It's been a long session. I appreciate your time, and hopefully we can speak again in the future. Please feel free to reach out at hello@airdna.co, and someone will be in touch with you very shortly. Thank you. Have a good day.